The internet abounds in tales of overnight crypto millionaires, and there are many novice investors who became millionaires overnight trading cryptocurrencies. But there is one person who is ahead of all these people, and he is Sam Bankman-Fried. In just 4 years, Sam rose from relative obscurity to crypto billionaire. 29-year-old Sam is worth a mind-blowing $26 billion thanks to FTX, a Hong Kong-based futures exchange he founded in May 2019 that allows users to buy and sell cryptocurrencies. Besides Facebook founder Mark Zuckerberg, Sam is the only other person to have amassed such wealth so quickly. Sam was born on March 6, 1992 on the Stanford University campus. His parents Barbara Fried and Joseph Bankman were law professors at the university. Despite growing up in a family of educators, he hated school. At around 7th or 8th grade, he admitted to his mother that he found school so boring that he was gonna die. His parents then arranged for him to join maths camps for the summer, which honed his problem-solving and managerial skills. After graduating from a small private Bay Area high school, Sam attended the Massachusetts Institute of Technology in 2010, where he half-assed his way through a physics degree and spent most of his time playing video games such as StarCraft and League of Legends rather than studying. In 2014, he graduated with a degree in physics and a minor in mathematics. He stayed at university thinking about becoming a physics professor. However, he was essentially extra focused on ethics and morality and had spontaneously developed an interest in altruism and utilitarianism. The core principle is to use logic and evidence to do the most good possible. People usually donate to popular causes or to those that have had a personal impact on them. An effective altruist uses data to determine where and when to donate to a cause, focusing on impersonal goals such as saving the most lives or generating the most income per dollar donated. One of his teachings is earning to give, the purpose of which is to earn as much money as possible in order to generously give it away to selected causes. It was this teaching that guided Sam's eventual path to wealth. Sam knew that donating part of his income is only possible from the high-paying job. He decided not to pursue a career as a physics professor and started to amass a fortune. In the summer of 2013, Sam began working at Jane Street Capital, a quantitative trading firm, trading international exchange-traded funds. Initially an intern and worked full-time after graduating in 2014. 3 years later, he started thinking what he would do for the rest of his life. Simultaneously, Bitcoin experienced its first mainstream bull run and climbed from below $1,000 to nearly $20,000 in 2017. He had never been interested in crypto before and knew almost nothing about crypto. Despite knowing little about crypto, he recognized it had a potentially enormous upside. When he looked at the crypto world, he found out there was much more enthusiasm and demand for cryptos than there were firms ready to provide them for buyers. He noticed that, in comparison to United States Bitcoin exchange prices, Bitcoin was trading about 30% higher in Korea and about 10% higher in Tokyo. Demand for the coins was tremendous in those countries, and the obstacles to international crypto trading laws, regulations, fear were hampering foreign-held Bitcoin from being sold in those countries. This is where it all began. He felt that by applying the arbitrage skills he'd learned at Jane Street Capital, he could earn a bit more money in crypto. But there he built complex mathematical models for trades that aim to make money off tiny price differences. On crypto exchanges, the discrepancies were hundreds of times bigger. To let you know, arbitrage is the process of simultaneous buying and selling of an asset from different platforms, exchanges, or locations to cash in on the price difference. Because there were huge arbitrage opportunities, therefore he quit his job at Jane Street and founded Arbitrage trading firm in October 2017. And hired his friends from college and moved into an Airbnb in Berkeley, California. This trading firm was specialized in buying Bitcoins in the United States in order to resell them in Japan for a 10% profit. By January 2018, he was moving $25 million of Bitcoin per day. Unfortunately, the spread died in early 2018 and had to shift their focus to other coins. However, he seemed unconcerned. He'd noticed that the existing crypto exchanges weren't very good. They were unsafe, glitchy, frequently crashing when prices plummeted or spiked, and wasn't providing customer support. He took advantage of this great opportunity and decided to start his own cryptocurrency exchange. He attended a meeting in Hong Kong where he pitched his professional exchange idea to Asian traders and investors. He took some of the profits from his trading firm and raised $8 million from a few small venture capital firms and launched his own crypto exchange FTX in May 2019. Business was slow at first. A dozen employees worked hard from the standing desk in a WeWork in Hong Kong, attempting to entice traders to their new exchange. However, he soon carved out a niche for himself, catering to more experienced and pro traders wishing to trade derivatives such as futures and options. However, many inexperienced retail traders started trading as they simply wanted to make more money. Since the purpose of FTX was making more profit, they started operating more trades for higher amounts. As a result, FTX was making more money in commission, and it supports up to 20x leverage. Leverage refers to using borrowed capital to trade cryptocurrencies or other financial assets. It amplifies your buying or selling power so you can trade with more capital than what you currently have in your wallet. The amount of leverage is described as a ratio. It shows how many times your initial capital is multiplied. For example, imagine that you have $100 in your exchange account but want to open a position worth $1,000 in Bitcoin with a 10x leverage. Your $100 will have the same buying power as $1,000. Say you want to invest $1,000 with a 10x leverage. The margin required would be 1/10 of $1,000, meaning that you need to have $100 in your account as collateral for the borrowed funds. If you use a 20x leverage, your required margin would be even lower. But keep in mind that the higher the leverage, the higher the risks of getting liquidated. In 2021, FTX facilitated more than $67 billion in spot crypto trades. It now has around 1.2 million registered users in total. In terms of earning to give, he wants to keep only 1% of his earnings. He gave away $50 million in 2021. The vast majority of his net worth is tied to FTX. When he realized that growing the exchange was the best way to generate money in the long run, he bought back the 15% of the company he had sold to Binance for $2.3 billion, which he sold for $17 million. Since he is not a true believer of crypto, he's just in crypto to earn money, and if the opportunity arises, he will jump ship to something more profitable.